RealAgriculture.com's coverage of Farm Progress 2013 is brought to you by Syngenta Canada, bringing plant potential to life. We're at Farm Progress Show in Regina. I'm here with Moe Agostino from Farms.com Risk Management. Welcome in, Mo.
Thank you.
Mo, you're speaking to the crowd here. Lots of people very interested, as always, in the markets. When you look at the Western crops, wheat and canola, last year when we talked, you really were accurate in your forecasts and your predictions. How do you sort of see the lay of the land this year?
This year, if I look at the fundamental supply-demand, we got some support there. We got very tight stocks on canola. If you look at canola ending stocks last year, Stats Canada said 350,000. This year, only to increase to 400,000. That's important because that's very tight. Historically, very tight. That's going to be supportive price. Western Canada was maybe a tad late. Saskatchewan Weekly Crop Report today reported that 40 to 60% of the crops behind. That's not good. That's a big chunk there. So could be subject to some frost here later on. So it's up to whether if we planted less acres this year than last year in canola, the yield doesn't come through. Watch out above. We could test $600 a metric ton. On the wheat side, we're planting more. We're rotating out of canola because we've had multiple years of canola on canola. And so that's going to put maybe some pressure on basis in Western Canada. But overall, we've had some issues with hard red winter wheat in the United States. We've had more acres in Durham, less in the United States. Those two could offset each other. But prices were a lot higher 6 to 8 months ago. And they seem to have found a bottom as we get closer to that harvest in the United States. Last year we had a rally through that post-harvest. The funds have been net short, and they're starting to cover some of those short positions. And I feel that we may have found a bottom here, and we could see about a 50-cent rally between now and the middle of July.
How come I really appreciate your bullish argument. How come we're reading so much lately? It seems where it's more of a bearish scenario.
Well, it is if you look at the global picture. If you look at what USDA is factoring for global production, ending stocks, Ukraine, Russia, Australia, there's some big numbers coming down the pipeline. And even the USDA numbers, the ending stocks for all wheat in the United States are down to that 659, which is lower than last year at 700 and change. It's still a comfortable number. So be careful. Long term, I think there's added pressure. It really depends on what happens with corn and beans here in the next couple months. Short term, you may have found a little bit of bottom. If you're looking to catch up on sales, and maybe you're just starting to sell some of that wheat, look for a rally through that middle of July. Hopefully we can get through these outside market pressure. And I would, Minneapolis at 850, Kansas City probably in that 750, 7.75, Chicago wheat at 750.
So would you say if a farmer told you here for 13 crop on canola or wheat, I was 25% sold, would you be like, way too far ahead of yourself?
No, not at all. Well, Western Canadian producers tend to have a little bit more weather issues than the rest of us in North America. So, 25 to 30 is probably a good number, but if you got into the ground, that's half the battle. It's come out of the ground. It seems like from what I'm hearing from producers out here, it looks good. Maybe you need some heat, and hopefully it comes for you. If you get some sort of rally, I'd go to that 50% mark of your guaranteed insurance bushel yield.
Great, Mo. Thanks a lot, and we'll talk to you again soon.
You're welcome. Take care.